warriors. So I want to welcome all the viewers from investing.com. You're joining the Eagles today. And before FACE, which is ForexAnalytix Community Experience, even gets started, our subscriber chat room is very busy into the ECB, as you could tell. People sharing their trades. Some people made money on the gold, euro, before we even got started. This is available to subscribers only. Faces an hour of analysis. So say, for example, I wanted to know why someone took a trade, I could ask them. So besides posting your ideas and seeing people trade, including our team, Amanda's she's a top gun, trades a lot of cable. Everyone knows Blake and his history trading for one of the biggest funds out there. This is me. I'm not in here as often, but Stelios is here and Steve sharing all day. A big advantage of being a member of ForexAnalytix is this subscriber-only chat room. So you just get an idea of what's happening here, and these guys have been at it for hours. So no matter where you are on the globe, there's always some company. Right now we have 114 in here. You could tell that it's a supportive environment because people are congratulating each other. You go into a lot of chat rooms and there's envy and even people rooting for others to fail because they are, and it helps them rationalize their lack of success by seeing others not be successful. But as you could tell, this is a true FX family trading community where they celebrate others' victories, not just their own. And there's also some nice cartoons coming here. They talk about reloads, and as you can see, even know what Blake is doing in here. He's here all day long unless he's running an errand for the family or taking one of his sons to some sporting event. So I really look at this as being one of the major assets of being a subscriber here. Okay, Blake's looking for CAD to turn lower. I'd also like to here show you the action on ECB so far. We've got a nice pop in the euro here based upon Draghi's statement. I don't believe the press conference has started yet. I'll have the team commenting on it. But to me, it looks like new highs, taking out these highs is most likely positive. I want to remind people to tread lightly. Tomorrow we have a major red event with the NFP. I think that most market participants are looking for a pretty strong number and hourly earnings to go up to. My sources, one of my main sources being Jim Welsh, who I've interviewed here quite some time ago, sent me some charts about a growth scare. And also when he was here with us, there were some unusual factors that may lead to a weaker jobs, hourly wage gain. So if there's going to be a surprise, it's going to be that within the NFP report, it's not going to look as strong as people are looking for, which could light up the bond market. Dollar should be dollar negative. Still think that the dollar has had it for a while. We diagnosed it up here last week. I think we're going back for at least a third drive test at 88 and maybe get some type of throw over. Many Elliottians looking for 126 euro. Think that could be done. Some even higher. I think as high as 760, some of the counts that I've seen. So I do a lot of intelligence gathering, and we're going to do some later with our guest. I have Michael Lamoth with us. Michael's a stock trader. Trying to show it. Here's his website. So stick around for Michael at the top of the hour. Obviously, there's a lot of people that think his work has value. He has about 30,000 Twitter followers. I'm looking forward to meeting and talking to Michael about what he does. It's interesting, Michael, besides trade, still has a full-time job. So that's my theory about having more than one revenue stream. and takes the heat off every trade. Not many people can do it full time, just, you know, pull out money out of their account all the time, because everyone has drawdowns. So if you have other revenue streams, those drawdowns don't seem as critical to you, and each trade is not life or death. Anyway, I strongly recommend investing in your future trading performance by joining us as an ForexAnalytix subscriber. You'll have use of our traffic light page, all the active patterns in play, as you could see, just like we're getting this little push notification here that we're being live streamed. When important support and resistance levels give way, you're going to be notified, whether you're at your trade station or you're on a towel in the Caribbean listening to the waves and trading the waves. So I'm very interested in seeing what the team's initial reaction is to what's happening here in Euro. And I know that most of us are negative the dollar for now, can't think of a reason for the dollar to rally. And here we go. Looks like this continuation trade is developing here. How are you this morning, Blake?
Good, Dale. Give me 1 second. I just need to put in a new pattern in play. I'm here. Just give me 1 second, okay?
Yeah, sure, buddy. So as you could see, we do our own intelligence gathering here. Nice EU trades, Blake. There may be some minor tweaks. So this is Mark Chandler's. There's a new pattern in play. It's announced here. You see people share fib readings. So you have right now in here, you have 216 eyes besides your two working for you. So you're going to see things that you normally wouldn't see on your own, because let's face it, we can't cover everything. Okay.
Okay.
And, that's another value of the room, is you have other people bringing things to your attention that you would not have seen. Okay, bro.
So how's it going today?
Good, buddy.
Good.
It's almost Friday.
What's that? It's almost Friday. Yeah, my kids are super excited because they're super excited because they're going to they got spring break coming up this week, so they're very excited about that. So really quick, I picked up the euro dollar overnight. I've been telling the guys and gals in the chat room, I'm buying the euro dollar when it gets to 130, 123.65. This is if you guys don't recall this right here, you can see it right here. This is a big breakout point. So I staggered a couple orders. One of them was at 70, which got tripped by the time I got up. I didn't get tripped at my 65 because we went as low as 68, didn't get it. And then so ahead of the ECB, I was long, and then the ECB rate statement came out, and even though they didn't change rates, they did change some of the verbiage, basically saying that they stand ready to increase the size of quantitative easing if needed. That was omitted from the statement. So because of that, the euro dollar spiked higher. So, we're at a point with Mario Draghi that he has to face the music. He has to realize that, we've got to wind down quantitative easing. We've got to start raising rates. Things in Europe have improved to a point where they have to start reducing, the pace of quantitative easing and wind it down and reverse course with monetary policy. And this has been a long time coming for the ECB. That needs to be done, and it's getting done now. So and you can see it in the verbiage is changing. So this is one of the things that's going to keep the dollar really under pressure moving forward, is for the simple fact that the Sorry, I've got people yammering at me out from all different fronts right now. The office and this lady, she's talking like just talking her ass off right now. Hold on really fast. Give me a second, please. Shut up, woman. Sorry, I didn't mean that. Okay, all right. Okay, so anyway, somebody's gonna scream at me for saying that, but she just talks and talks and talks and talks and talks. Anyway, that's not true. But this lady in particular, when she's on in the morning, she just like talks, like yammers on. Like there's one guy that's on there, he's just straight to the point, blah blah blah. That's it, and then he's done. She just keeps going and going and going. Anyway, okay, now I can try to get my head straight again. So the ECB, okay. The problem that the dollar is going to have moving forward is, and this has been the issue that really provoked me to being short the dollar all through last year, was basically, you know, the Fed's going to be done raising rates and every central bank is going to have to start playing catch up, and that's what's happening now. And the ECB, arguably the biggest central bank out there, if not, you know, the second biggest, or whatever you want to say, however you want to say it, they are now starting to reverse course and showing their hand that they have to face the music now, and this is going to be a drag on the dollar moving forward as every other central bank starts to turn hawkish and you know, starts to reverse course with their monetary policy, you know, direction, if you will. So anyway, the dollar should stay under pressure as a result. Technically, the dollar, as long as it's below 91, is bearish, period. And as long as it's below 91.50, this downsloping trend line, it is bearish, period, end of story. All right. We got that out of the way with the euro. So with the ECB press conference is coming up, and if you guys don't see it, this is was a nice, you know, you can call this a flag pattern. That's what I'm calling it. You know, however you want to draw it, you want to draw it like that, you want to draw it like that. I don't care. However you want to draw it, it has a bullish breakout and a perfect retest of this breakout point. As long as we stay above 123.60 now, it's bullish, you know, period. And I would not, thank you, I would not be surprised if we retest this multi-year trend line, which comes in at 126 and change. It is a multi-year trend line, and if we breach that, then poop's going to hit the fan. As far as if you're long the dollar, you're in real big trouble, because once the euro breaks through this multi-year trend line, we are going to be targeting 130, 135 going into, you know, into next year. And you know, the dollar is going to be sold. Whether it doesn't matter what you own, when the euro dollar breaks something major like this, you're going to get some cross rate effect. Even the pound, it doesn't matter if the news is really bearish for the cable, Brexit, you know, reasons. The cable will get dragged up tooth and nail by its ponytails, dragged up the hill with the euro dollar if the euro dollar breaks. So you have to be aware that the cross rate effect is going to be pretty massive if the euro really starts to break out. Now, one of the other trades that I did yesterday, and I'm revisiting it right now, is, and I already shorted some dollar Canadian this morning, is short the dollar CAD. All right, and I was short overnight, pretty aggressively too, and my son had a late baseball game. I didn't get home until after my bedtime, so that's how late it was. And I closed out my dollar Canadian short because I was short at trying to think where I was short, like 129 excuse me, like 129.40 or something. I was pretty aggressively short yesterday after basically the US said that they're going to give you know, Mexico and Canada a break on tariffs, you know, for security reasons or whatever their reasoning was, the dollar Canadian came getting slammed down, and we closed near 129. We made another leg lower while I was at the baseball game. I didn't catch the low, but by the time I got home, we were trading at 82, and I said, you know what, I'm going to just close out my position for the night since we respected the support here, and I'll revisit it in the morning. Thank God I did that, because when I got up this morning, we were trading up here at the 618. And if you have ForexAnalytix, you are well notified as the US dollar Canadian has bounced back to the 618 retracement at 129.51, which has stalled the ascent for now. So when I stepped in, we were trading at 129.45 or so, and I told the guys and gals in the chat room I sold the dollar Canadian at 45. I closed it at 35, or I sold it at 44 and closed at 34, something like that, or 31. Anyway, I made a little bit and then I reshorted it again. Now let's talk a little bit about, this for a moment. Okay, let's stop and talk about Canada for a second. When you're talking trade, and I'm going to ask you this, Dale, when you're talking trade, who owns all the cards right now? Dale, who do you think? He's not there. He might have ran to the restroom. Okay, I'll ask you guys. So in regards to trade, I'm talking to you guys and gals that are the listeners right now. Who owns all the cards? And where is my button for, how come I can't see the questions? Hold on. Options. Oh, there they are. When you're talking North America, the U.S. does. Okay, the U.S. does. We have all the cards. Okay, so when we're talking about trade and U.S. and Canada, we have all the big cards at the negotiation table. All right. Now, the overnight, the U.S. said we're going to give Canada and Mexico 30 days, and that's until the beginning of the next NAFTA negotiations. We're going to give Canada and Mexico 30 days to come up with a better plan on trade, and if there's any progress being made, or we like that plan, or roughly speaking, this is me roughly speaking, we're going to extend the relief on tariffs. So it's in Canada's best interest, unless they want NAFTA to go bye-bye, it's in Canada's best interest to continue to negotiate with the U.S., come up with some ideas, some plans that's going to help the trade situation, and therefore ultimately it's going to be bullish the Canadian dollar. And I was talking to the guys at the office, and they're like, well, look, if we negotiate a better deal with Canada, it's only going to help Canada with the steel trade, as well as we maybe import less from China, and we import more from Canada. Ultimately, if Canada stays at the negotiation tables, which it's going to be it's going to be in their best interest to do so, it's going to end up being bullish the Canadian dollar. So for me, and bearish the US dollar in this particular case. So for me, I'm looking at this bounce in the dollar Canadian as more as an opportunity to be short the dollar Canadian. Okay. Now, then on top of that, you compound the idea that the euro dollar is going higher, the dollar is getting sold against the euro. It only makes sense that the dollar Canadian is going to go down as a result as well. So I'm more than happy to be selling this dollar Canadian on rallies, as long as we stay below 130, and more specifically, if we stay below like this 130.50 up here. I hope we don't revisit these levels, but as long as we stay below these areas, I'm looking for this channel that we see here to eventually break down. Now, I drew out yesterday or the day before yesterday this possible Gartley pattern. I'm gonna get rid of it because I don't know if we're really gonna see that now that we had these hard rejections over the course of the last few sessions at 130. As long as we stay below 130, I'm gonna be on the short side of the dollar Canadian. But more specifically, I'm looking for the dollar Canadian to eventually break 128, and we're gonna revisit these low 120s again. So again, I'm gonna stay short the dollar Canadian. I'm gonna try to at least, and stay long the Canadian currency. Now, there's one other thing I want to talk about this morning that I did publish a chart on ForexAnalytix, but I'll talk to you guys about it right now, is the S&P. You know, all this talk about trade, you know, and tariffs, and you know, this all seems like a concerted effort about going after China ultimately, who's, you know, the big, you know, who has been the big beneficiary trade-wise for the last arguably 30 years, okay? Because that's the big kahuna, right? If you're talking trade, who's the U.S. ultimately going after? They're not going after Canada. They're not going after Mexico. Ultimately, they're going after China. All right, and that's where this is all headed. All right, it's all about renegotiating and kind of leveling the playing field between China and everybody else. And, you know, to the U.S.'s benefit, but also end up being to a lot of the North American partners' benefit as well. If we continue to push this way, and the market sees it as being beneficial ultimately for the U.S., you know, you look at the stock market, and the stock market seems to be shaking off, you know, the Gary Cohen. Who is
everything.
that? Yeah, everything. We got a nice bullish wedge set up here, and as long as we're above this dotted line, there's a good chance right now that the S&P does this. Okay, and I wouldn't be short the stock market right now, not with the consistent highs, higher lows. You know, look at the S&P. It looks like it breaks the 618. We're going higher. You know, and so 123.35, and we're only, you know, a few points away from there. And this thing could really break, you know, to the long side. So
NASDAQ almost at new all-time highs, Blake.
Yeah, NASDAQ continues to rip. I mean, the Dow looks like
almost
it could.
There.
You know, look at the Dow. I mean, the Dow's
Dow's a weak sister. No.
It is for now, but. Yeah. You know, do we have a nice, you know, triangle that's building?
Yeah.
I mean,
yeah.
Look.
I agree.
And if stocks break higher, you don't want to be short. But also, it's going to fuel the fire behind dollar weakness as well. Not necessarily dollar yen, but dollar weakness. Euro dollar could go higher. Dollar Canadian could go lower. You know, even the Aussie dollar could be higher. Now, you know, I'm going to take one more step back, and I'm going to just give you a bigger picture view. And then I want you to think about this and just mull this over before Steve gets here. If ultimately the U.S. is going after China, which is going to be the case this year. I think we've talked about that a couple of times this since the beginning of the year. If trade is the big issue and China is the big target, okay, the currencies that are really going to suffer are going to be like the Aussie and the Kiwi. All right. And if you're like, well, I don't really know what to do with the dollar, but I think the euro is bullish, and I'm out of my euro Aussie, and foolishly I should have just waited and see if it broke below 158, but it's not. This euro Aussie, this thing looks like it is still going a lot higher. I mean, like when I say a lot higher, I'm talking like 170, 180, and we're trading at 160 right now. I'm very bullish the euro Aussie. I'm very bullish the euro New Zealand. You know, look at the euro New Zealand. This thing looks like it could rip higher. These are the cross rates that I think that I really want to be in, and I'm not in them right now, but they're the longer term ones. So anyway, just think about that longer term possibility of bearish China, bullish trade, bullish the euro as the US dollar gets sold, the euro outperforms. Think about what that does to the euro Aussie, euro New Zealand. Those currencies look very, very bullish, if you ask me. Okay. So anyway, just wanted to throw that out there. And hope it all makes sense. So, does it make sense to you, Dale? How about you, Steve? Steve is there.
I'm here.
All right, Steve, does all that make sense to you? I don't know if you were listening in.
Of course I was.
Yeah, so I think the euro looks extremely bullish, and these euro crosses look great as well. So how you doing, Steve?
I'm good, mate. I'm good. How have you been?
I didn't get much sleep last night, or less sleep than normal, because I got home after my bedtime. That was how late the game went last night. So, but other than that, doing well. So how are you doing today?
What can you do?
You can't do anything. No, it's just part of it. You just wait. I'm sure your son is going to be a footballer, and eventually he'll have practices late into the night, and you're going to have to do your schedule around him too. So.
I really appreciate that you've already accepted the correct term for football. That is football.
That's all. I only say that to Europeans. To the Americans, I go, "What the hell do they call football? Football is when we crush each other. We break bones." But anyway, no, just kidding. Anyway, but hey, the ECB press conference is going to start pretty soon. The euro looks pretty bullish. What do you think about it?
You know something, I really, we've been saying that for a long time, but I really don't know what Draghi can actually say to persuade the markets that the ECB is not going to tighten. I mean, the Eurozone economy is doing better and better. As you very well said, they've definitely been behind the curve, and intentionally, because seeing that the dollar has been depreciating, I think that the ECB would have already done stuff if it wasn't for the dollar that has already depreciated. So in essence, I think that the fact that they still are more dovish than expected is simply the exchange rate and nothing else. Of course, they have never and they will never acknowledge that, because if you remember, every time they ask them, they say that the ECB does not target exchange rates, etc., etc. But obviously, this is a lie. They would have already tightened if it wasn't for the exchange rate.
Yeah. And if you look historically, I mean, the euro. The euro was at 160 at one point, and we're basically mid-range. And so if the ECB takes a step back and says, okay, we're going to have to raise rates, our exchange rate is going to go higher, and will the euro eventually be back at 140? That's it. It's very realistic and probably in their views. So
it is, but something in retrospect, always looking back, you can see how important it is to see what's happening ahead, because the market is a discount mechanism. I mean, the fact that we started rallying since last year, I think in essence is also part of part due to the smart money, knowing that the ECB would have to do some catching up.
Yeah.
So part of it is already baked in, I think. Part of it.
Right. Hey, one last thing. Duchin asks, would like better explanation on how to trade Fibonacci retracements. I'm a newbie and I was looking for suggestions. We're filming a video, and we'll have our video store, and I'm putting together a comprehensive how to use Fibonacci's and use them, hopefully effectively. But the way I use them will be. I'm actually writing the script. It should be done in the next few weeks. Actually, in the next hopefully couple of weeks. I'm going to try to film actually on Friday, and it'll be a very inexpensive video that we're going to house for you. Probably be $30 or $40 or something like that, depending on the length. But that'll be available in our video store coming up. So, all right, I've got.
Are you filming this, Blake, in Italy because it's Fibonacci?
Gotta go. See you guys.
Hey, Steve, how are you?
I'm good, mate. I'm good. How have you been?
Good.
Okay. By the way, Draghi has already started speaking. Stelio, are you here, mate?
Yes. Yeah, we had some Canadian data was a little bit stronger than expected. Building permits, housing starts, both stronger.
And U.S. initial jobless claims a little bit higher than expected as well, 231.
Continuing claims lower than expected. So I think U.S. data is pretty neutral, but Canada is a little bit stronger than expected. But it's all about, we have Mexican CPI as well in 30 minutes for whoever trades Mexico, and the peso, and the pressure is starting now.
Okay, if you can keep us up to date with whatever Draghi says, I mean, whatever, you know, makes a difference actually perhaps in the Q&A or his initial statements. Okay, thank you very much. Okay, so
I heard him say, "I don't want the euro to keep going up."
He's not going to say that, but trust me, that's exactly what he's thinking, right?
All right. So Steve,
this is.
I'm pretty impressed with the way the index has recovered yesterday after Stevie Cohen left. So looks like we may have another count, maybe back to your 2,800 level. That formation measures.
Might be. I told you that I was really afraid that we might get some choppy price action, and you know this whole formation, just a scenario, might end up being some kind of a triangle, right? So we might find ourselves like in some kind of a range with, you know, the S&P, for example, which is obviously the most important barometer of risk, like acting something like this for a period of time and then, you know, breaking higher. If this is to be a triangle, we have to respect the upside as always. But of course, if for any reason we come below this double top, we test it and we actually break below it, you know, things become very different. But for the time being, we have to acknowledge that we are in the middle of this large sell-off. And you know there is the potential for you know S&P, for example, not going anywhere fast. Obviously, the fact that the market dismissed Cohen's resignation shows that there is some underlying strength. There's no question about it. But will that be enough to push the S&P to new highs, like straight from here? Personally, I still doubt it. Okay. I still think that the market is not yet ready to do that, even if it is to resume to the upside. Okay.
But NASDAQ, by the way, will do it, right? NASDAQ's like a stone throw away from new highs. NASDAQ.
Yeah, and don't forget that NASDAQ has been leading, and you know has been the steam engine of stocks recovery. You know at least for several years, right? I mean, tech stocks are.
NASDAQ's got its fangs in my arm, man.
Stelio, what did you want to say? Yeah.
Yeah, we've got the first few comments coming out, and as usual, Draghi is covering both sides. The main item so far is that he's saying the economy is to grow faster than previously forecast, so that's bullish. But then he says we need to see convincing signs that of sustained inflation pickup. We need to see that. So that implies that they're not seeing it yet. And
yeah,
also,
okay, but
also
I think it's.
Yeah.
Go ahead.
I just want to say he said afterwards that the ECB is to monitor FX changes and financial conditions.
He did say that.
Yeah, he said that. So that's interesting.
That's interesting indeed.
I don't see the euro doing much. Well, strengthening mildly, but not doing anything massive so far.
Interesting. So he acknowledges that they're monitoring FX rates. In essence, he's hinting that they might be willing to do something about it. Interesting.
Yeah, I mean, and it's something they haven't said explicitly before, like you said. So, you know, and he did say
regardless.
Again,
well, you know why? I think Draghi sees the same trend line that Blake showed, that 3-year downtrend line that will be broken above 27. I think they know that. And if they're going to have any impact to dampen the advance, they have to do it before that happens. What do you think?
This is the trend line. This is the weekly.
The other thing he said is underlying inflation is subdued and ample degree of stimulus is needed to boost inflation. So he's playing it both sides, right? As usual.
Yeah, but I don't think that the market is listening to one side, because you know what the market is listening. The market is listening. Everything is going better. I have to say, you know, a couple of stuff as well to not be so optimistic, etc. Because who knows where the Euro USD is going to find itself. But the market is just filtering that out as, you know, central bankers' noise. He has to say that because we all know why.
And they just revised 2018 growth at 2.4 versus 2.3%. So just marginal higher revision.
But regardless, they keep revising economic data and how the Eurozone economy is doing, you know, up constantly during the past few months, and you know the market is taking notice of that. And if you see on the weekly chart as well, this consolidation on the weekly also seems like a bullish one, right? I mean, just look at it. I think, you know, the Euro just wants to punch through, and then perhaps we're going to get ourselves a test of this confluence of the 61.8 of the last leg lower with the descending trend line, and that's going to be, you know, a very critical area to see how the market is going to react. Because obviously, if we punch through this area, I think that things will become very tough, because, you know, the market is going to take notice of that, and I think that you know, just people are going to start piling on being long the Euro before. Obviously, you know, a market that's tilted one side at some point, you know, will give you strong reversal, but the trend remains what it is since the very, very, very first couple of days of 2017. So this is already a very well-established trend. It's ongoing like for 14 months now. And, you know, I've said it when we were correcting lower as well in the Euro, that you should definitely not be trapped by trying to catch reversals here. Because, you know, it's already 14 months and the Euro hasn't even given us like a proper retracement. I mean, if you see every kind of corrective move it had so far was mostly in the form of a consolidation, not even like, you know, price depreciation, a significant price depreciation.
Well,
at some point,
Steve, you know, Grega's long on a pattern in play, and he's not the only Elliotician looking for about 126 for it to be 5 and complete something up there. So, you know, that really is, that could be at least a short-term good shorting opportunity based on that we're completing a 5-wave advance, right?
Let's see. Let's see, because, you know, from, you know, besides the technical, you know, factor of this being a strong resistance up there at 126, I really don't see what will get the Euro strongly reversing, right? Obviously, nothing moves in a straight line. There's no question about it. But, you know, purely from my experience, if we break out from this consolidation, I think that 126, which is just going to be an incremental new high, won't cut it. I don't think it's going to be enough. So, personally speaking, purely from a technical perspective, I think that if we break above this consolidation, we should find ourselves having a decent amount of momentum to perhaps make it to 128 before, you know, some kind of a correction.
I've heard a 760 number. I don't know what it's based upon, but for months now, something at 2760.
I don't know what it is, but, you know, for me, it looks more likely that we do something like this, and perhaps then come down to retest this area. You know what I mean?
Mm-hmm.
Because 126 is already too close. I mean, we almost got there. What was it? Not even a month ago. So that's my point of view, at least here.
Okay.
Okay. So let's have a look at you know, since Euro is in the spotlight today, let's have a look at some more of the Euro crosses. First of all, it's the Euro Yen. We already said, you know, a couple of days ago that this is a strong area of resistance. It has already proved its significance, because this is the third day that, you know, we haven't yet managed to break above it, although there seems to be some momentum. So, you know, there's still the potential of a rejection from there, and the resumption lower, but definitely if we break above this area, I mean, if we close on a daily basis above this one, roughly, let's call it 130, 150 area, which is an area, it's not like a single level, it's plus or minus like, 20 pips in this case. I think that the situation becomes, somewhat more complicated because yes, we will have seen like a decently strong move to the downside, but on the other hand, we will be breaking back above a very, very strong area of support resistance. You can see how many times the horizontal level has, has played a role recently. So this is definitely going to somewhat complicate the situation and, make, the bearish scenario a little bit more tricky than it would be otherwise. Meaning, if we get rejected from here, because then it's going to be, a straightforward interpretation. We got a nice reversal. We got a move lower. We came back. We retested strong resistance, and we are on our way to, resume to the downside for, whatever is needed. So if we actually break above this area, I think that, coming back to retest another important area at 134.30 will be quite likely, and that's, decently far away, isn't it? So, I think all bets are off if we actually close above here. Now, having to do with Euro Aussie, Euro Kiwi, Euro CAD, we've said that before, and that's exactly what we had designed here. First of all, we were viewing this move lower that started from this head and shoulders formation as corrective, especially as long as we stayed above this horizontal area at 152.20. This is exactly what happened, and then we bottomed by forming an inverted head and shoulders formation. And then we broke higher. We had momentum. We built a bull flag. We initially said, we immediately said that this looks like a bull flag and definitely not like bearish price action. We broke above it once again. We seem to be, consolidating, but I really think that, at least we should get ourselves by, up to 161.8. And definitely, you should keep in mind that this is also an uptrend that started just a little bit afterwards, the Euro USD finding a bottom. It started in February, and it hasn't been violated since because we keep posting series of higher lows, and this is all you need to know, right, to call something an uptrend. I think it's more than clear here, right? So as long as we keep posting series of higher lows and eventually of course higher highs, this is all that's about. So this is a well-established uptrend. I think the next series area of resistance is the 161.8. We might get like some kind of a corrective move lower from there, but it still looks very nice. I mean, it's still a well-established uptrend. Now let's have a look at. Yes, Elio?
Sorry,
what did you say?
Just to interrupt for a second. He hasn't said anything really. We're waiting for I think the Q&A is gonna probably give some more information. But the one thing that they've done is they revised the inflation projection for 2019 lower by 0.1. So instead of 1.5%, yeah, because 2018 has come out lower than they expected anyway. So it's 1.4% for this year, and then they revised next year for 1.4 as well, instead of 1.5. And then 2020 is unchanged at 1.7. So it's only a marginal change, it's nothing. They're tinkering here, it's nothing.
Yeah, absolutely. Although I never stopped finding funny the fact that we are making projections for 2 years ahead.
Yeah,
and we all know that that's 1,000% a fool's errand, right?
Yeah,
I mean,
0.1%, 12 months in the future. I mean, that's like,
yeah,
even 0.2, 0.3, who knows? You're right.
I understand the mathematical approach that, you do your best given the current data to at least like make an assumption for the future. So I'm not saying that I don't understand, the point of, going into this exercise, let's call it. But on the other hand, we know, like, for example, in my opinion, by 2020, the global economy is going to be in a recession once again by that point, right? So, for example, as you understand, when and if that, not if, sorry, there is no if. We all know that the economy goes through recessions and expansions, and we will never find a way to stop that, most probably. So, at some point you get the next recession. We are already overdue for that, and some factors have started showing that it might not be that far away. So in my opinion, there is a high chance that we're going to have a recession by 2020, and we all know that if that happens, all current projections are going to be looking like a joke then, right? There's no question about it. I mean, inflation and unemployment, everything else is going to be so out of expectations and target at the moment that it's going to just look like a joke. Anyhow, Euro Kiwi, we were left with Euro Kiwi, also formed an inverted head and shoulders formation to indicate that it found a bottom. But the good thing about the Euro Kiwi is that it was also still respecting a very nice ascending channel, which also very nicely caught several times the bottom, and Euro Kiwi is up in testing quite an important horizontal area of resistance. If we break above there, I think that we then open the road for at least a move up to the highs near 175. So the area I'm talking about is like roughly at 171.50. I think that the break above there, will give at least another 300 pips to the upside, because there is no real resistance until then. So obviously between the two of them, there is no question Euro Aussie has much better momentum. We've explained that multiple times, just by checking the cross trade, the Aussie Kiwi, that the Aussie is the weak sister lately. So if you want to be short the Aussie or the Kiwi against the Euro, or obviously long the Euro against the Aussie or the Kiwi, for the time being, the Aussie is probably the best bet. So being long the Euros instead of the Euro Kiwi.
Mario's saying something, Steve. We're getting a tail and a reversal in Euro.
See?
I haven't seen anything.
Okay.
ECB's decision to drop the QE easing bias was unanimous. That's a strong signal. Which way is it going? It's not.
Euro's fading.
Yeah, I haven't seen any major headlines in the last few days.
Euro is fading so far, but what you said, Stelio, that the decision was unanimous, is obviously not bearish. It means that they all agreed that, in essence, they should keep moving even slowly, towards a more hawkish approach, right?
Yeah.
So
having said that, decisions in the ECB are usually unanimous, right? So they tend to move in a pack. But
that's true.
I don't know.
Although to be honest, we've seen Weidmann, the Bundesbank governor, disagree several times in the past, especially about, or not especially, always with anything that had to do with the dovish approach to the markets, right? Because we know that the Bundesbank,
and he's the most probable successor to Draghi. So if that happens,
it says a lot. It says a lot.
Yeah.
Because we know that the Germans' approach to monetary policy is by far the most hawkish in the Eurozone, right? By far.
Anyway, the action's kind of negative, whatever they're saying.
Yeah, that's true. And something, many times what they say doesn't really matter. What matters is how the market perceives whatever they're saying.
Yeah, we don't trade language, we trade price. So just wanted to point it out to our community. It looks like it could be a failure, at least short term. Okay.
It's good to have a macro picture in your mind, because it's always nice to be doing a top-down analysis, but we are always trading price action, and there is a very good reason for that. What the vast majority of technical traders are going to tell you is that even whatever macro data or events or language the market wants to take into account, it takes it into account, and that is embedded in the price. So in essence, by doing technical analysis, you're also doing analysis on whatever the market decides to notice having to do with macro stuff. So it's not that when you're doing technical trading, in essence, you're ignoring anything that isn't technical. You're not, because price doesn't ignore it. That's the whole concept here. Okay. Regardless, I really would kind of be surprised if the euro really reversed from here. I mean, I don't see anything from the ECB side that shows that the euro should reverse. And I think that I remain of the opinion that any any retracements are probably better to be bought. If you remember, I was adamant about it even when we were dipping lower towards the 121 area. And definitely that's the case here as well. Don't forget that we've already had like 5 consecutive up days before today. So, we've already seen a move higher, and even a little retracement is just going to give the opportunity for people to enter long. I don't think the euro is moving lower from here. Really, I don't. I don't see why it would. From a technical perspective as well, I mean. Okay, so let me have a look at a few questions, and then we have a lot of things to talk about, unless we get some like more price action that we have to take notice in the euro. ECB new conference, yeah, we know that. Yeah, having to do with the video store, it's exactly as Blake said it. Blake also just put out a peep on euro long, target 126. Yes, that's true. Eurosec. Is it possible to see that it has broken out of a multi-year cap and handle? And if that isn't possible, there might be another sort. Okay, let's have a look at it actually. That's interesting, the Eurosec. Yeah, it's exactly what you're talking about. And, there's no question that this part of the move is clearly impulsive. So the euro is obviously strongly overperforming, the SEC. And what our friend here is saying, Frederick, is that isn't this a cap and handle formation? And the answer is, yes, sure it is. Absolutely. It absolutely is. And, regardless, just keep in mind that, the Eurosec has bottomed in the middle of 2012. So, we've kept pushing higher with large periods of consolidation, like the one we had here with the cap and handle you're mentioning, and this one that was channeled here since 2012. The next area of resistance, which isn't that close, is 1040. As you see, it's the 61.8 from the high that we saw back in 2009 down to the low that we had in 2012. But yes, this is definitely a major breakout from here. Good eye. I mean, I'm rarely looking at currency pairs between currencies that more or less are very highly correlated. But this is a good move actually, and yeah, this is a very clean breakout. I think that obviously somebody buying here doesn't make much sense, right? But this is a cap and handle formation. Do this roughly, let's say. Definitely, if the market does something like this, I think it's going to be a wonderful opportunity to be buying. I doubt it that it's going to be, so kind to give us a retest of the breakout area, given, the amazing momentum that we've had to the upside. But if it does that, then I think that's going to produce like a very nice buying opportunity. Thank you for bringing that into our attention. We talked about Euro Aussie. Just for clarification, Steve, what time frame you're talking? Because in my opinion, what Dale is pointing out make much sense. As day trader, you follow price action and act accordingly. So if you're talking in macro view, is of less importance as a day trader. Martin, what do you mean? What time frame I'm talking about? About which of my statements? If we're gonna move higher, you mean? I'm talking about the short to medium term, that I think we're gonna move higher, even if we see a little correction from here. So we have a question about gold. Let's have a look at it. not much has changed since yesterday or the last time we saw it. The best interpretation I can make about gold is that it's trading now in a large triangle. If that's the case, a break to the upside is more likely than a break to the downside. But definitely, given the fact that we find ourselves once again in some choppy price action here, and we're roughly in the middle of this triangle, I think that not much to do here, not much at the moment. Not necessarily, Eric. He's asking if the bottom needs to be more rounded. You never can. You never have the perfect formation, but I think that no, it is a cup and handle formation. EuroCAD, yes, I actually promised that we're going to have a look at it. So let's have a look at it. First of all, let me have a look at the Euro USD once again. So far it's spinning top today, so not much to see here. And let's have a look at the EuroCAD. Okay, the EuroCAD obviously remains bullish. It's attempting to break out of this ascending trend line that you see here. It has already broken above the 161.8 of the last correction. Let's also put here the 200% expansion. Actually, that's where we are. We are at the 200% expansion of this corrective move lower. So far, I can't say that this is bearish price action. It looks like another consolidation. But as I had said, I think you should be a little bit careful here. At some point, we should see some corrective move lower, and that will be the chance for somebody to be buying. I don't think that buying up here makes much sense because, simply put, you don't have anywhere to put your stop loss that it would make sense having to do with reward to risk ratio. So if you're not already participating in this, you just need to be patient and wait for some type of a retracement, see some type of a corrective price action, and then a signal that the trend is resuming before doing anything else. I think simply this is the case. I mean, there's not much else to do. Euro yen, Euro Aussie, Abdul, we already looked at them. You can see the recording afterwards. I already went through both of them. Mentioned that it was bearish for the rest of the year on Euro. Could you clarify? Stelios mentioned he was bearish for the rest of the year on Euro. No, I don't think he did so. Stelios, you didn't say that, right?
I have said, not on the webinar, I said that on the chat at some point. I personally think that the market complacency on what's happening in Europe, there are quite a few potential, okay, I'm not saying they're going to happen, but quite a few potential binary events that could, that could trigger Euro weakness, like Italy, the market just completely disregards what's happening in the Italian elections. Okay, we don't know the result yet, but the safe scenario is ruled out already. So, things like that makes me a little bit nervous about the Euro for the rest of the year.
I agree 100% with you. There can be events that can bring Euro weakness, but something, and I'm saying that not as a political commentator, just as an observer. Yeah. Italy is a significant part of the Eurozone. There's no question about it, and it's a big economy. There is also no question about it. But it's one of the countries in the Eurozone. On the other hand, the US has common leadership and is currently under Trump. And we've seen that Trump, can actually, do things that will immediately affect the US policy, since he's the only one, he and Congress, but, he's the president, is, the most important actor in this case, having to do with decision making. And we've seen that he can make decisions that can break the dollar, honestly. So if I had to choose between the two of them, I mean, if there can be an event that will actually be very bearish for the euro, or more likely an event that will be very bearish for the dollar, between the two of them, I would probably be more scared about the dollar, my personal opinion. Of course, course, you know, that's just an assumption. You never know.
I don't disagree. I agree 100%. I wasn't talking about the euro dollar in particular. You know, I was talking about the euro in general. Sorry, pardon my dogs.
Millie has a different opinion from what I hear.
Don't forget about Paul, and it is interview time. But Paul is the second most powerful man in the U.S., and his regime has just started. And he didn't sound like a dove to me, and he didn't sound like he would care to have the stock markets back either. So we'll see. Don't discount a new Fed chairman is all I'm saying.
No, I agree with you. But you know, we had one last thing I want to cover. Give me 30 seconds, and because we had a question about crude, and you know, this is something I showed in the chat room as well yesterday. Listen, this is a moment of truth for crude, simply because you know, it has remained in an uptrend. There is no question about it, and we said that we don't know what form this correction might take. If it's a triangle or if it might produce one more low towards 55 before higher. But, you know, we already know what is the area we have to be watching, and it's this one, this trend line. Why? Simply, I don't even have to go down to a 4-hour chart. You can see that this can prove to be a head and shoulders formation, right? So we break below this area, just above 60, 50 roughly, we close below there. This is a nice head and shoulders formation, increases by a lot the chances of one more push to the downside before higher. If this area holds, obviously this never becomes a head and shoulders formation because it will never trigger. And then the scenario that we might push higher from here, you know, stays on the table. So now we have a clear formation, we have a clear level in mind, and you know what to watch to determine if oil moves directly higher from here or towards 55 first. Okay, that's it. So we'll see each other in the chat room or tomorrow if you're not a ForexAnalytix member. Enjoy the interview, Dale. Thank you.
Okay, Steve. Thank you, Michael. Thank you so much for joining us today. I'm looking forward to speaking with you. I'm making you the presenter now, so looking forward to hearing your voice and seeing your screen. I have your website up here. Appreciate you being in face today, Michael. A couple of drop-down menus as I made you the presenter, one for your mic and one for screen share. Got your screen, Michael.
So far he's self-muted, Dale, so he needs to unmute himself.
Okay, if you could hear us, you need to unmute yourself. Hello? Steve. Okay, we've got you. Thank you, Michael.
Hey, all
Thank
right.
you, Steve. Nice to meet you, Mike.
Nice to meet you as well. I'm just figuring out GoToWebinar over here, minimizing some stuff, bringing up some other stuff. And
okay.
Yeah, so can you see the screen okay? And
yeah, we have the S&P here right in front of us, and I want to thank you again for taking time out of the trading day to edify our community. And I know that you're mainly a individual equity trader, maybe some ETFs. I've been to your website. I'd like to ask my guests how they got into the trading industry, how long ago, who influenced them. Basically, who do you blame for getting the trading bug?
Who do I blame for getting the trading bug? Well, I think I would need to blame my Uncle Francis.
Okay.
Back when
There's always someone.
What was that?
There's always someone.
Yeah, definitely. I think I would blame him. Back when I was probably about 10 years old, he was telling me about this stock that he had found, or this company that he found after reading the Wall Street Journal, and it allowed electronic devices to talk to one another without the use of wires. And of course, he was talking about Bluetooth at the time. And
wow.
It was just fascinating. That was, 20 years ago. So I would have been in my, probably around 10, 12 years old at the time. So
okay.
Probably more like 25 years ago.
Okay. So that got your interest. You started looking at grabbing your dad's or uncle's Wall Street Journal and you started looking around, or you said, wow, you know, you can really make a lot of money if you find the right company, right?
Well, that planted the seed, and my path was that I actually didn't have any money to invest until I finally graduated high school, and I started to work part-time while I was earning my degree. And I had saved up a bit of money. I had about $5,000 at the time, and I had no idea how to go about investing in stocks. So I just went to my local bank where I had my savings account, and I walked in, and they happened to have a little area where you could talk to a manager or what I thought would be a manager to talk about start trading stocks. So I spoke to somebody and he said, I want to start buying some individual stocks. And they said, whoa, you don't want to do that. That's way too risky. Well, what you want is this. And he pulls out his several different pieces of material that were basically a basket of mutual funds. And he started to show them to me. And so I was looking through these various prospectuses, and he was telling me, well, what are you doing? Nobody looks at those, and so I just very quickly was like, okay. I flipped through it a little faster and said, oh, I'll take this one, this one, and this one, and they were basically a basket of different stocks. So the mid-cap stocks, small cap stocks, and then a bond fund. And I thought that I was being
conservative.
That I was being very wise. That I was letting a professional manager manage it for me. I was very well diversified. Each of these things had about 200 different varieties of stocks and bonds in them, and I was doing very well. This was in 98, 99.
Okay.
And,
yeah.
Yeah, 6 months go by.
And I'll bet you this, that he didn't say what the load was on each of those.
Oh no, I don't remember anything about any of that. It was all, the conversation was about diversification, that you can't do it because the market is just too hard, too complicated. Here's my product that can help you.
Right. That was his inventory. So you don't want to do this. We have this in inventory. I bet the loads were like 3%, 4% back then, Michael.
Oh, I'm sure they were, and I had no idea what a load was.
Yeah.
So,
you're that manager at the bank did.
I bet he did.
Yeah.
And so, of course, after 6 months, it was up. I think I was up maybe about like 5-6% relatively quickly, and I thought, wow, this is great. And then like after a year, it was up maybe about 10%, and I thought that, wow, I'm a genius for doing this. And so then my studies started to
then 2000 came.
What was that?
Then the year 2000 came.
Right, but the year 2000 came, I had no idea what was going on because I started to get so involved in my studies that I just thought, well, this professional manager has it, like I don't need to really worry about it. And I didn't look at it again until I was just about ready to graduate in 2002. And at that time, I thought that my initial investment would have ballooned into something like 10,000 at the time, at the rate that it was going. And the last time that I had actually checked, it was sitting at around 8,000. So I thought that, okay, I should have a halfway decent amount to put a money on a down payment on a car. It'll be great. And I checked my statement, and it's not at 10,000. It's not at the 8,000 that I had sought out previously. It wasn't even at the 5,000 that I had started with. It went all the way down to 4, and I was in shock. Here I thought that I had professional managers managing it for me. I was diversified. What in the heck happened to my money? And so I just pulled it out and I went home and I cried, and that was the end of my trading journey for a while.
You know what, Michael? That experience that you had, millions did, and they had a repeat performance of it in 2008. Therefore, we had a boom in self-directed trading. People finally decided that these salesmen that held themselves out as investment counselors, who really knew nothing about trading or anything else, that if anyone was going to lose their money, it was going to be them. And that's why we had a huge boom in self-directed trading. So, okay, so you made this realization and you became one of those guys said, well, you know, the manager at the bank really wasn't that professional. I'm going to learn how to do this. Who influenced you? I see your setup, you use candlesticks. What did you do next? Did you take courses? Did you yourself have a mentor?
I ended up having mentors sort of along the way, now that I look back on it, and then like as my trading progressed. So fast forward to maybe about 10 years ago at this point, and I had started a new job, which I'm still currently in. I'm a fund manager. Nothing to do with stocks, though. It has more to do with managing grants, philanthropy, that sort of thing. And a coworker told me that, hey, you should probably start to look into managing your own money and looking into stocks and everything. And I told him my sob story, and he recommended a few different books for me to read. And one of them was How to Make Money in Stocks by William O'Neill.
Okay,
and,
yeah. Investors Business Daily. Okay.
Yep. Founder of Investors Business Daily. And I read that book, and it made terrific sense to me that historically what the biggest winners in history have seen have all had certain common denominations to one degree or another, and they all sort of revolved around earnings and sales and something new about the company, being a leader in its industry. And most stocks, or like the vast majority of stocks in the market, are not going to meet every single criteria of this quote unquote ideal growth stock. But if you could check off enough of the boxes, it would give you a higher probability of finding something that could potentially run 200, 500, 1,000%.
So, yeah, he also popularized having a relative strength ranking, which means you buy the strongest stocks when they're pulling back, and you liquidate the weak ones when they're rising, or short them. So that's still a very important thing for trade selection. Relative strength rankings, aren't they still for you?
Yes, absolutely. When I'm looking for different stocks to trade, one of my criteria is the relative strength. And if a stock is outperforming the market and outperforming its peers, then that's something that I'm going to investigate and gravitate toward.
Okay. All right. So it's interesting that you have another job, and you're managing funds for a philanthropic organization. Is it just moving money from cash to other things, or it's completely unrelated to what you're doing with your subscription model, right? You don't manage money. Go ahead.
It's completely unrelated, although I would be remiss if I said that there were no transferable skills. One of the things that I do on a day-to-day basis, I use Excel quite a bit, so I'm very proficient at using spreadsheets, generating pivot tables, and things of that sort. That's come in very handy with market analysis, because it allows me to do a lot of the heavy lifting very quickly. And so one of the things that allows me to trade efficiently is being able to do that and be able to do all this part-time. And that's really what birthed the idea of chartyourtrade.com because, you know, as I started to learn and I started to get involved in these other groups. So one of the things that Investors Business Daily offers is meetups where people could go and discuss the ideas around the CanSlim trading methodology with one another. And so I went to the one where I am in New York City. And I was in that group for about a year. I learned a lot from those guys. And then I started to show them what I was doing and what I had learned and how I was starting to apply things and make it efficient. And they were pretty impressed with what I was doing as a part-timer. And many of them wanted to adopt what I had started to do. And so I thought that if I was able to impress people with decades of experience, and some of them that were doing this professionally with what I was doing as, you know, just some kid that was interested in the market, then I thought that, man, maybe I have something that's worthy of sharing on a much grander scale. And that's how Chart Your Trade was born, and Chart Your Trade was born a little over 5 years ago at this point.
Okay, so very interesting. You know, I coach and mentor people that, you know, it's a very rare breed of people that can just support themselves through their trading, and that even some of the biggest traders like Richard Dennis in Chicago had a clearing firm and another revenue source. So do you think that you could support yourself just on your trading without your other job? And does having another job take the pressure off you so that each trade is not life or death for you?
Oh, absolutely. I'm not my trading by itself wouldn't be able to support my household yet. I'm not sure if at some point in the future, I imagine that the accounts would grow large enough to where they could. Would I necessarily want them to? That's a question for future Mike to answer. But right now, I would imagine that it would add quite a bit of pressure, and to not have to worry about that this is going to pay for the mortgage, or that it's going to pay to put my daughter through school. It allows me to be a lot more objective, to not have that additional burden.
Okay, yeah, okay, very good point. And you probably designed this. I read a little bit on your website before we get to maybe a few comments on the market. You did believe that low that we had in February would hold. I read a little piece, nice call. Did you design this website for people that also this is an avocation for them rather than a full-time vocation, because that's where you come from? And you know, mobile apps, I don't know if you have one, but it's much easier for people to have a job and trade because of mobile apps, because let's face it, if you're working for someone and you're pulling up trading websites on your workstation at work, your employer most likely wouldn't be very happy about it that you're spending time observing the market and trading. But you have your phone there with a phone app, and you could always just, you know, get in, get out, and, you know, continue to do your work. So phone apps has also made it much easier for people to be self-directed. And someone gave me a statistic. I think it was Greg Horvat. Of his subscribers, I believe 80% or more also have a full-time job. Is that what you've discovered?
Well, the way that I trade is to do the bulk of my my work on at night and over the weekend, and then like similar to how Nicholas Darvis would do his work. He's one of my trading heroes, because he was somebody else that was able to trade part-time, not pay attention to what the market's doing during the day, and be extraordinarily successful with it. And that's before we had computers and being able to trade from your phone and everything.
Right.
So I think that people of today have it really easy compared to how it was way back when. And
maybe maybe people are too close to the market now, and it's actually an advantage. I know that we're short term here in our currency trading, but I tell people that it's better once you have a position on to manage the position from a longer time frame, so the noise doesn't jiggle you out of what you were thinking about originally. So maybe being more detached is actually an advantage than, watching every tick. It doesn't change your destiny anyway, does it?
Well, I think that for me, I would definitely agree with that statement, but I think that it really depends on the individual. What works well for me might not work well for you, and I think that self-awareness is one of the most important and underrated qualities that anyone can really have. And it takes a long time to really discover what's going to work well for you as an individual.
Yeah, you just echoed what Jack Schwager told me, author of Market Wizards. I asked him what's the most important advice you could give a trader, and he said find a trading style that suits your personality. And that's a process too. Some people may start off thinking they want to be day traders, and after a few months they realize they want to be swing or position traders, or vice versa, after they discover how their emotions work when money's on the line. So, Michael, we've had a two-way market since that little mini panic in February. Has this made the markets more enjoyable for you to trade instead of a one-way street that we had going into that time frame? That markets are a little bit more binary?
Well, for my trading style, the way that I am trading now, and this is something that helped me dramatically, is separating my accounts out by time frame. So here's what I mean. I'm somebody that likes to look at multiple different things, and I used to have everything just in one account, and so I would trade something on a shorter time frame, and I would end up getting distracted by something on a slightly longer time frame, so intermediate to longer term, and then I would end up getting confused and end up selling one position that was kind of okay but wasn't doing anything wrong to go for the shiny new thing, and that would screw me up. So what I do now is I have 3 separate accounts, one for short-term swing trading, one for intermediate term, and another one for long-term retirement. And so keeping them separated in that regard was able to get me out of most of my positions into cash right around this neighborhood in my swing term account, and started to back out a little bit in my intermediate term account. And the long term trading account, let me just pull up a monthly chart, didn't bat an eye, because we're still holding above this 12 or what's a 10-month moving average on this chart. Let me just adjust that. So 12-month, and so long as we are above the 12-month moving average in my retirement account, I'm still holding, because the retirement accounts are just the basket of mutual funds that I get from my employer.
Why did you choose 12 and 40?
On this chart, well,
I mean, if for the moving averages that are important guidelines for you, I mean, people use all different types of time frames. Why 12 and why 40?
Well, 40 just happens to be on here. It's really the 12 month that I'm looking at on this particular chart, and the reason why is because if we stay above the 12-month moving average, and the bulk of the mutual funds are pretty much following the path of the S&P 500 to one degree or another, the ones that I'm holding, I would exit on a close below the 12-month moving average, and I would either enter or stay in on a close above. So I'm only looking at my retirement accounts at the end of the month to see, well, what's it doing and is there some kind of a signal to do? So when this move happened, that was scary for many people, but it went down, touched that 12-month, and within a couple of days, it had bounced it and rallied off of it. So still nothing to do. Back here is where you end up getting chopped up a little bit. So you end up exiting down here, and then you're back in and you're getting chopped around. But the benefit of it is that you end up missing this and you end up missing all of this down here. And so for that part of it, you end up outperforming.
Okay. So do you do any sector work? Are there any sectors that you favor after, you still have buy signals going? Since you do follow relative strength, what are the leading groups or stocks right now? And what are the laggards? And we'll wrap it up with that. What are you seeing?
All right. So
So breadth is also going to be an important measurement for you. I see new highs, new lows. You still with me?
For it runs 8 different scans and it has over 65 different criteria within these scans, and I could give a link to the criteria later on, but it's running these different scans, and then it overlays this ideal growth stock screen, and it populates results every single week, and you could adjust by what percentage you want all these stocks to pass this ideal growth stock screen. But what it also does is I'm sorry?
Yeah, it's a nice tool.
Yeah. Oh, yeah. Like this would take me several hours, or at least a few hours on a weekend to scan and then overlay a checklist. And to be able to just click a button and get it done is such a time saver. But the other part of this is clicking on reports and then comparing this week's results to the prior week's results, and then seeing is there expansion or contraction in a particular industry group. And so that's something that has pointed me towards pockets of strength within individual industries and helped me start to avoid or at least investigate other industries that are quickly taking a dive. Like this, for example, regional banks, last week was the 12 stocks had passed. This week, only 6 stocks had passed. So, okay, I would go and investigate the 6 stocks that are passing and see what's going on within that group. I would also look at others that are starting to move higher, like the airlines, like oil and gas.
Okay.
And so those are things. That's just one criteria of things that I'm looking for.
I also read you're a big fan of TradingView, that it's made your life easier. I use it. What do you love about TradingView? We'll do a commercial with them.
Well, this indicator here is one that's pretty useful. So somebody else created this new high versus new low indicator versus the NYSE, and I thought that this was fantastic to overlay on the S&P. I also like to look at the new highs versus new lows on the NASDAQ. So like I create my own charts for that just to see. And what I've noticed with that is that as the number of new highs expand and the number of new lows contract, that it typically precedes a move in the market by a couple of days. So it gives you a little bit of a heads up. And so you kind of see that rapid dry up here, right? Just before we took that nosedive. So that was curious, especially after you had such a large succession of new high, new high, new high. aside from the technical analysis, that if you drew this and you see that it's breaking down below that and it's just really getting way ahead of itself, the rapid dry up in the number of new highs and the expansion of new lows preceded that move by a few days.
Nice market tell. So what's the best way, Michael, for people that have heard you live and will see the video to reach you, follow you? Your Twitter handle is what again? It's not your full name.
The Twitter handle is
I have it.
Michael G. Lamotte.
That's right.
At yeah, let's see. Yeah, there you are.
Okay. Michael G. Lamotte, I see that on Twitter. And your website?
Michael G. Lamotte, and my website is chartyourtrade.com. Let's pull that up.
Okay.
And that's really the best way to find me. I'm here. I'm on YouTube, Instagram, Facebook, trying to be all over the place. And yeah, on YouTube, I am doing 3 videos a week on a variety of topics. Some of the more recent ones have been sharing the path that I've been on to that allowed me to triple the return of the S&P 500 last year. And I've been going through that trade for trade and showing people that it definitely was not a straight path higher. There were drawdowns, there were periods where there were several losses in a row. There were some very frustrating trades along the way. And there were also a series of very big winners that we were able to hold on to. Things like Adobe that we bought January of 2017 and that we're still holding today.
Wow. You know, Michael, it's been a great interview, and especially your last point. You know, anyone could be great when things are going well. I've always believed the difference between a pro and amateur is how I've always believed that the difference between pros and amateurs is how they manage their emotions and psychology during a drawdown. So you just talked about it. Everyone goes through it. What's been your worst drawdown?
Oh, I'm sorry, I lost the audio for a second.
Okay.
You said what was the worst drawdown?
Yeah, what was it?
We ended up losing about I'd say 7% in the portfolio last year.
Okay. All right. So what you didn't hear me, but anyone could be great when it's all green. Pros know how to manage their psychology and emotions during a drawdown. So why don't you wrap it with this? While you were going through some adverse times in the market, what kind of self-talk did you give yourself to get through it?
What kind of self-talk did I give myself to get through some of those drawdowns? Well, it's sort of an evolutionary process. So Mike, from a couple of years ago, would have been second-guessing a lot of the actions that were being taken. Mike today understands that it's all part of the process, and part of the way that I've been able to grapple with that a lot better is through daily meditation. So I meditate for about 15 minutes per day, typically in the morning before the day gets started.
TM?
I'm sorry?
Is it TM?
TM?
Transcendental, you know, transcendental meditation. Okay, it's your own form of meditation. That's a great.
No, I'm actually using this app called Headspace. Have you ever heard of it?
No.
It's a fantastic app. It gives you guided meditation, and it yeah, it really is remarkable. I ended up finding this out from Amazon. I had the Amazon Alexa, and she was telling me about Headspace just in one of those ads one day, and so I decided to check that out, and then I found it in the App Store from Apple, and yeah, since then it's become a daily habit, and I've only been doing it for about a month, but even just from a month, it's been quite a different change and perspective, and it's brought about much self-awareness.
Namaste, my trading warrior brother. Thank you so much, Michael, for being with us today, and I wish you and your subscribers continued success. You definitely was a great presentation, and I think you definitely get it. So appreciate your time with us today, and like it or not, you're my trading warrior brother. And let's get back together another time. Thanks for sharing your methodology and your journey and some of the tools you use. The meditation is a pearl. So thank you for your time, Michael. Appreciate it.
Thank you. It was a real pleasure, Dale. Look forward to talking to you and your audience again. Thanks so much for having me.
Glad our paths cross, everyone. That's Michael Lamoth. And we'll see everyone for the NFP tomorrow and wrap up the week, TGIF. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow prior to the NFP. Good hunting the rest of the day. See you in the chat room. See you, Michael. Thanks again.
Thank you.